Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny. And today we're going to talk about Chairman Powell, arguably the most powerful man in the world. He talked this week and made some major moves as far as the market. We're going to talk about what he had to say and where we think we're going.
Two Super Guys Trade Stocks.
So this was a direct quote from Powell this week. We need to do more. We need to do more. Don't forget.
Yep, I agree. We do. Also, for those of you, there have been some comments asking about the TLT wheel strategy. I'm going to address that at the very end.
Nice, sexy. So Fed funds rate, they held steady at this most recent meeting. They didn't increase, holding that 5 to 5.25, kind of data point. But the interesting thing kind of gets into with this meeting is that it was a quarterly meeting where they update their projections for the rest of the year and years going forward. So we're going to get a little insight into what they're thinking on the longer term basis, right? So like I said, short term, nothing really moved there. But longer term, things are still happening. If you want to slide yourself over for a second here, this is the Federal Reserve balance sheet. This is one thing Jerome Powell said. Just because we didn't increase rates doesn't mean we're still not doing things in order to help curb inflation, meaning they're still offloading their balance sheet.
Oh, wow.
Granted, yeah. So that whole spike when we got the kind of banking crisis,
right,
that's kind of readily been eliminated, and they're now starting their downtrend again from that same kind of point.
Okay.
Longer term basis, don't forget, that was a lot of money created over the last couple of years. This is M2 money supply, and we're actually seeing it turn down rather significantly here. So there's a contraction in money supply, which is not something you really see very often. I mean, look at this. Going back to the 1960s here, money supply only goes up. Printer only goes burr.
Yeah. I honestly, I think Buffett said it correctly. He's like an American hero, right? I think he's doing pretty good when you compare us to other countries that are not doing great, because that's a pretty noticeable downturn. I actually did not know that we had that much quantitative easing since March. That's a lot.
Well, quantitative tightening.
Sorry.
Tightening. Yeah, exactly. Not easing.
Yeah,
So this is another one Powell kind of alluded to, and this is from the Federal Reserve Bank of Atlanta. This is looking at kind of tightening of credit facilities. We talked about how tightening can almost kind of be like an interest rate hike on its own, and Powell's alluded to that. Couldn't really put a number on it. He can't say is the credit market tightening, is that a 50 basis point move, is that a 100 basis point move? Who the hell knows? But the point is, look at look at these spikes that we've seen in the past where we've seen credit markets tighten, and those gray shaded areas are recessions. And they're kind of projecting things that are still positive as far as like in the kind of SEP analysis, but they are still saying that we're going to see a meaningful slowdown in the rate of GDP expansion. Right?
I will say they did say that before, right? And then all of a sudden, stock market did not care. Also, as we've looked at, I'm not saying this is logical, but the economy and the stock market do not mirror each other like a lot. Like it happens a lot.
Yeah, rough, but not exactly, not exactly a perfect thing. So and this is the PCE inflation from the most recent kind of data point we have here, and Powell talked about this, how PCE still running mid 4%, and then even more so the more important category, this core PCE, is running 4.7%, well above the 2% target. So they still are double the rate that they want to be. Okay, that means they still have more room to go here, and it's a slower slog and process than I think any of us probably originally anticipated. It's really hard to put that genie back in the bottle. It comes out really fast though. She said
he did. He did I didn't get to see this last one. I just had to read about it, but he has said over like the last 6 meetings, that they'd rather it's easier to do too much than too little, and too little can be a dragged out horrible process like the 80s. So he's been fairly transparent that he would rather be harsh than not harsh.
Yeah, I mean, he's being aggressive, and you still see how much kind of stickiness this has had. He got into kind of the sectors of PCE a little bit here, and talking about which ones they are seeing some positive impact on, like as far as like goods. Goods has had a good kind of a deflationary environment. However, he's like, you talk to business leaders, and they're telling you that supply chain is still not back to where it was pre-pandemic. They're still not having so many goods that they're getting the kind of deflation that you really should see if we're completely normalized. Now, the one that's really been sticking around is non-services housing, which is like the largest portion of the PCE index. And because it's services, it's really reliant on wages. He really talked a little bit at this time about not exactly calling it this, but like that wage price spiral, and said that kind of increasing wages really was a large portion of this, and why it's sticking around so well is because of that service sector, non-housing service sector, because of the increased, wages in that environment. And that's a large environment for wages, right?
Yeah. Also, I feel like remember all those people that were like after like the fourth hike, they were saying, "Oh, if you can't hike anymore, the whole economy's going to collapse." All those
Yeah,
people are silent. That was a lot of people. I think
yeah.
Yellen, after a certain amount, was like, "We can't do this anymore." Jay
Wow.
Powell's awesome.
Yeah, it's insane. And then he did talk about they're still seeing signs that kind of labor markets come into better balance. There's not as many open jobs right now. That unemployment rate did tick up a little bit to 3.7%, from 3.5, and that labor force participation rate is still continuing to climb. So the kind of market forces as far as actual employment are coming back into balance, and that he thinks that will help moderate that kind of non-housing service sector inflation, and that's really where we'll see the kind of tipping point as far as getting inflation back under control. Um, sorry, this right here is just total credit available. So I was trying to give like another metric as far as like the kind of credit market tightening. This is just showing you that there's a decrease in the amount of credit available to like kind of private businesses, that we have been in a downtrend now. So
So,
that's another
but I mean, it
projection,
looks
right?
like it's still kind of above par where we usually were, right? Before 2020, because 2020 is such a weird scenario.
Yeah. Yeah, fair enough. Yeah, I know money went crazy for a period of time. Yeah, we're
Yeah.
still working back towards our baseline here. Yeah,
Okay.
agreed. It's not exactly back to where it was pre-pandemic, but getting pretty close. So this is the dot plot. You've seen this before. This is basically where the Federal Reserve, all the members vote and say where they think the rates will be at the end of the year. So this is where you're getting that headline number about the fact that they think there's another 50 basis points of hikes coming this year. Because if you look at like where all the projections are kind of hanging out here as far as like the midpoint of this group, you're looking at this 5.5 to 6 range. So I think they said 5.6% Fed funds rate is like the midpoint for the end of the year as of right now, based upon the Fed governors.
So that's two more rate hikes.
Two more rate hikes. And Powell was interesting too. He talked about how throughout the year, he said basically last year and this year, we've seen a steady increase in the expectations at the end of the year. That as the year has come forward and we've seen more and more data come out, everyone is kind of starting to go like, we really have to do more both times now. So he's like, it
Yeah.
still may continue to trend up as far as the expectations.
I did see a article released by a Bank of America analyst. I'll take that, with a grain of salt. But he was saying that the most logical places for the rate hike is going to be July and September for both of
Yep.
them.
Yeah, so that was one of the questions too. Was like, are they doing an every other meeting thing? And he's like, we didn't, kind of explicitly agree to that, but like, we're going to continue to monitor data, and that that could happen, the kind of sort of thing. He didn't exactly say that, but he was trying to say
Right.
we're not locked into anything right now. But if you look at next year, they're only calling for like 1% or so in terms of rate decreases from that point. Midpoint here is around like 4.5 of this projection. So it's still going to be a slog, unfortunately, to get this goddamn inflation back under control. So that's the scary part.
This slide is going to be super important for the TLT comment at the end. Just
All right.
the only 1% lower for all of 2024, just to be clear.
Yeah. The dot plot. So unemployment right here. This is the same thing. This is their kind of projections for like where they think they're going to end up at the end of the year. So they are calling for unemployment to come up a little bit, like 4.2%. I think they said was what their median was. So it's not moving up as aggressively as they originally had thought. If you look at the kind of dotted line here, that's where they thought that was going to be in March. So they're saying that the unemployment market or market for employees isn't coming down as quickly as they would have thought. And then they have a longer run here ones where we're going to look at unemployment peaking in this 4.5% in 2024, 2025. So we're in that ballpark. So PCE inflation, the same kind of thing. You're looking at 2024 before we're getting down even close to this 2%, 2.5% for the headline number, which he's saying is the less important one. The next slide is the core inflation here. So core PCE, you're looking at even 2024 having it somewhere in this 2.7% range, which is above their target. So they're not looking at till right now 2025 before it's back to goal, which is crazy.
Yeah, that's definitely a long time. This is kind of off topic, but it always annoys me when presidents will talk about like the labor rate, and
Uh-huh.
the Federal Reserve is usually pretty accurate, right? So in terms of labor rate prediction, because they control so many different things, so whoever wins in 2024 2024. Is that the next election? Right?
Yes.
Yeah. So they're going to have an increase in labor, and all 50% of Americans will be like, it's that person's fault. When in
Yeah,
reality, it has
absolutely.
to go up. It
Yeah.
doesn't. Yeah. It's going to
It is
be.
actually at this point that Dylan is announcing his candidacy for the 2024 presidential nomination
Yep.
under the Blue Moose Party.
Kanye is my VP. Here's what we're gonna do. So the TLT strategy. I'll link the video right here. I haven't done a lot. I've only gotten to do two covered calls with this. I'm actually trying to get taken away, and I did one put that was pretty successful at 2%.
Nice.
It keeps on bouncing between 100 and 105, but now that we're predicting two more rate hikes and having 2024 as only a 1% difference, I am going to try to offload this at doing riskier and riskier covered calls because my average price, I think, is 104 on TLT
Okay.
right now. And the 90s is looking like that would be the place to buy puts, especially if we're getting two more rate hikes, right? Because bond yields really, really respond to rate hikes, and another full 0.5% is going to change this. So I am definitely going to exit my TLT position before the July meeting. I'm just doing riskier and riskier covered calls until I get called every week. So
Okay. So a little bit too soon for the strategy is ultimately kind of what we're determining here.
this meeting changed it. We gotta after September, then I think this is going to be a good strategy for a year. We're just a little bit early.
Nice.
Yeah,
I like it. Always got to reevaluate your own opinions in the face of incoming data, right?
absolutely. All right, guys. Have a good
Catch
one.
you next one.